Welcome all traders. The time is now 7:03 a.m. Eastern Standard. Trading ES near contract month, March 2015. Prices are now marked to the market at 2098 flat. That's 2098 flats. Price is once again approaching the 15-minute level. In this case, flying in the 15-minute chart, current support 2098. Price is up now to 25. Downside is 97, 95, and 75 on a target. Current uptick on MFI, non-clear to be short, waiting for the trade to increase. Distribution on downside. Across the board, we're real close here. For the short, the 1-minute chart, in this case right here, looking at the level established at 2097 and 75, just a tick below 97 and 50 for the preferred in. Most recent significant volume at 631 and 632. 631 brought in 823 lots, presumably traded short on the test for the low at this area. Price is now holding at 2098.25 MTM, 7:04 a.m. on 3/6/2015. Jeff Kilian running through the setup for the day on ES. $20.97.50 short will be the best possible fill the trader can get. Instant target at 96 and 75. And then again, 95.75 for the preferred out. If prices hit 96.75 and trade up, as soon as we get an uptick, we'll be out and looking for the turnaround and a follow-through, a tick below 96.75 and 96.50 for the second leg to the downside and the out at 95 and 75. $7:06 a.m. Eastern, 3/6/2015. We'll need both MFI and CMF in order to give us a clear confirmation. To be short, we do not have that at this time, so we'll cut the tape and pick it back up if and when we get those confirmations, and the additional volume will come in at or near the floor, currently established at 97 and 75. Time is now 8:33 a.m. Eastern Standard on 3/6/2015. Range finder bar in play here on the 1-minute chart. High here, low here. The interesting part about this is that on a 15-minute chart, prices have reached on a run up here previous resistance located at around this area, at around the 210250 area. As you can see, a probe above and a probe below. The setup from the check and money flow indicator itself in isolation with a trendline violation to the downside is an early warning that this support level may be crossed from above to below internally. With the MFI down now suggests that prices can trade to the downside. The preferred entry is below the 15-minute floor at the 298 flat area. This remains to be seen and will play itself out soon enough, but without a doubt, substantial smart money has come in. This cannot be denied. The institutional trading that came in at the 8:33 bar, once again Eastern, on 3/6/2015 for 12,940 contracts. That is in incredible amount of contracts to be traded at this time. This essentially is a decision maker. Stops taken out to the down and the upside here. Again, this will play itself out soon enough. Now prices get above the 210250 level on the 15-minute chart. That's a possible play to the upside. So in this case, a preferred end would be located at 2102 and 75. Again, extrapolated from the 15-minute chart. We have an absolute match on the 1-minute chart at 210250. Now price is trading down. Trendline violation complete on check and money flow to the downside. Short move setting up nicely. And we're looking for the preferred end at 2097 and 50 traders. Targets to the downside. 95, 75, 95, and then again here, $94.25. Our methodology has identified with a high probability trade. Preferred entry just about hit. Price is now MTM at 2097.75, 2098. And there we have a test at the preferred entry price right here. 2097 and 50, 2097 and 50 people and below. We're now short. We are short. ES near contract month. Price is falling quickly now. Initial target could have been hit on a limit order at the 95.75 level. Locking a quick profit. 96.75 penetrated right down to 95.75 from the preferred entry on a limit order at 2097.50. According to the setup that we're looking at relative to this trading methodology, prices should continue to trade to the downside. Long-term holders are good. Again, long-term holders are good. Full momentum down on CMF. Current value is a negative 24.73. Time is now 8:38 a.m. Eastern on 3/6/2015 Eastern. Now moving off the ceiling at 96 and 75. clearly demonstrates the benefit of limit orders here to here. If prices trade above this, all bets are off. Above this preferred entry at 97.50 by half a point, all bets are off for any continued hold to the downside. If they find 97.75 as resistance, there is a possibility, if held, can again trade to the downside. Short-term correction to the upside within a longer-term down move. CMF is retraced to the upside. Long-term holders, pay close attention here. Looking to be out of this. If prices do not hold the ceiling at the 97.75 on an open or close basis, $97.50 MTM, 97 and 50 at 8:41 a.m. Eastern 3/6/2015. Any volume that comes in at this point after the dry up on the institutional spikes, here especially on the probe to the downside, will drive the prices in the direction of the larger institutions' pre-planned movement for this AM's session. CMF now at a -17, -13, -17.45. Values traced to the upside because prices have moved up. Long-term holders, you should be almost out of this based on a retracement to the upside. Not an uptick, but a retracement to the upside. And there you have it. So you'd be out with a half a point loss at this point. Now let's let this demonstration, this trade, this AM on ES near contract month 3/15 serve as an example of how to get in and how to get out and lock in a profit on limit orders, both here on a preferred end and on an incremental price profit target to the downside at 20.95 and 75. Rolling it up, P2 minus P1 divided by P1 comes out with a gain in the trade. Of 1.75, following the methodology's guidelines. 1.75, times $50 every 4-point move is an $87.50 per contract gain times 70 contracts traded is a gain of 6,125. Now, the obvious second leg to the downside should be laid out right here, a tick below where prices halted on a close. Now again, short here at this point. So again here on the close at 2,098.75, getting in just a tick below. It's 2,098 and 50. 2,098 and 50 here. Looking for the second leg on a target to the downside at the 91.75 level now on a 15-minute chart that I just laid out recently. CMF down into the floor. Here's your target, 91.75, 91.75 for secondary trade. Real time. MTM 20.95 and 50. 8:44 a.m. 3/6/2015. Looking for the follow through. If not, right back out of the trade. And let's mitigate the risk. correction on the adjusted stop. On the 15-minute chart is here, 2,094 and 75, not 91.75. And price is getting down again, people, following through. We'll take the 1 minute out here at the 94 and 25. That's at the 94 and 25 on the rally to the downside. Locking in 2 trades this morning. The initial trade 175, and again here getting through. For the sure money on a secondary additional gain as prices even continue to trade to the downside. 2 separate trades identified within the context of the larger macro view of this smart trading methodology designed over 20 years ago. Jeff Kilian, Chief Market Strategist, here for the institutional side training. Once again on 8:46 a.m., 3/6/2015, signing out, getting out at the rally here. Second trade right here for the in. A tick below again at the close at 2096 and 50 for 2096 and 25, and the out at 2094.25 for an additional 2. So there's 375 to us today. For more information on the training that we can provide for your people, you can contact us here at 718-395-9347, and we'll be happy to address any questions on moving forward.